Hi, this is Lee Thurburn, and I appreciate you tuning in to watch this video. We are trying to monetize this channel, so before I jump into the video, let me ask you to please, if you like the video, please hit the like button. Leave a comment, tell me what you liked or didn't like, what you agree with or didn't agree with, and if you have an idea for a video you'd like me to produce, let me know what it is. And then finally, subscribe to the channel. Now, also, I have developed an accounting software package that is so much simpler than QuickBooks, and it's designed specifically for Turo hosts. And I'd like to invite you to go to carfleettools.com, create an account. You get a free 30-day trial, which includes telephone support. And I think you're going to like it. It's going to provide you with great, insightful information into how you're running your business and whether your individual cars are profitable or not. You get a profit and loss statement on a car-by-car basis, as well as a lot of other great information. And most importantly, not only do you get a free trial and free telephone support, but you also do not have to be a bookkeeper to be able to use this system. You're going to find it amazingly simple to import data from your bank and to actually run the whole system, get information out quickly and accurately. So if you have any questions, give me a call or post a message. You'll see my information when you go to carfleettools.com. Thanks for watching. Now let's get into the video. Hello again, this is Lee Thurburn, and in this video I'm going to show you how I research potential vehicle acquisitions and try to make sure that I'm choosing vehicles that are likely to be able to generate a good return on investment. So what I'm going to do is I'm going to start with a search for vehicles. And what I've done is I've set up a search for Dallas, Texas, which is where where I'm located, actually far north of Dallas, but still generally the Dallas area. And what I'm going to do is I'm going to set the search for a 7-day window of time and start it with the most near term. So here we are on the 24th, so I'm doing a search starting 2 days from now and for 7 days. So it's February 26th through March 5th. And I'm going to go ahead and set the basic search parameters for that time. And of course, the system will show a bunch of cars. Now I'm going to go and do filter for very specific cars. And first I'm going to go ahead and sort these by daily price low to high. And then I'm going to come down and I'm going to look for a particular make of car. And I'm going to look for a Toyota, say a Toyota Camry. And so I'll come and choose the Toyota. Let's go ahead and scroll it down. Here we go. Come on, Toyota. Here we go. Now we just passed it. There we go. Toyota. And then the specific model that I will choose will, of course, be the Camry. So I'll choose the Camry. And that's it. I want to do those cars. So I'm going to do view results, 40 results. Okay, so I'll view 40 results. Now, these are 40 Toyota Camrys that are available starting in 2 days. Each one of the Camrys, I'm going to collect a little bit of information. I'm going to collect the year, the number of trips, and the effective daily rate for 7 days. So what I would do is I would basically pick the year 2014, 12 trips, $34 a day. Now I'm going to enter this information for every one of these vehicles into a spreadsheet. And then what I'm going to do is I'm going to do exactly the same thing, but for the same search about 5-6 months into the future. So here we are in February, so I'm going to go about 5 months. 1, 2, 3, 4, 5. This is in August. So I'm going to choose August 4 through 11. That's another 7-day time frame. And we're going to do a search. And this is going to give us all of the Camrys. Now there might be some of these Camrys that have been rented. But most likely, if we go out 5-6 months into the future, we'll be looking at every potential available car that fits this pattern, which is a Camry, on Turo. So we have 114 cars. So we have 40 cars that are available and 114 cars that are the potential pool of all Camrys. And so what that tells us is that 74 Camrys have been rented. And what we ideally want to find is we want to find those cars that have been rented, and we want to look at them, and we want to try to compare the cars that have been rented against the cars that have not been rented. So we have to collect all this data, and then we have to filter through it. So here's what we do. We're going to collect the same information, 2017 camera, 48 trips, $31 a day. Now, I have already prepared a spreadsheet, which is for Toyota Camrys. Now, this was done a few weeks ago, but this is what I've done. So when I did the actual search a few weeks ago, the date of the search was January 27. So the first three columns are the year, the number of trips, and the day rate for every vehicle that was in the search that started 2 days into the future. And then these three columns are every single Camry that is available. And then what I do is I compare these three columns basically with these three columns to figure out what cars have been rented. So what I want to know is I want to know what cars out of the total pool of 116 cars, which ones were rented and which ones were not rented starting 2 days from now. So basically the first thing I do is I go through and I build this list of cars. Now, I've already sorted this list of cars by the year. Now, when I just record this information raw, I'm going to be I'm basically just writing down every vehicle. I go through the list, 2000, like I said, 2014 with 17 trips, $34 a day. In fact, we probably could find that car in this list, except for this list was done a couple, 3 weeks ago, basically a month ago now. And so the number of trips for each vehicle has changed up. Now, you're going to get a list of a small number of cars. In this case, I had 64 cars. You're going to get the entire list, 116 cars. And you're going to have to match this list of 64 cars against, on an each car basis, with this list of 116 cars. And so what you do is you sort each one of these lists based upon year, and then second sort will be trips, and third sort will be day rate. And then that'll help you. Then you do the same thing over here. You sort this list by year, by trips, and by day rate. And then you can come along and you can just sort of space these out by moving the rows down. And so I can find that this car, 2012, with 21 trips and a day rate of $37, is basically this car, 2012, 21 trips, day rate of $34. Now, why is this $37 and this $34? Well, the answer is probably that, they're a higher price for a nearer term. So, there's a couple of different reasons why prices might vary, as you can well imagine. But generally speaking, the primary indicators of which car we're looking at is the year and the number of trips, the year and the number of trips. So I put them on the same row. Now, what I do over in these columns, since this is a list of the cars that have in fact rented out, I then look at this car matches this car, which means it's not rented, so it's a blank space. These two vehicles are not in the list of vehicles that are available 2 days from now, so that means they have been rented. So I go through and I just do this matching on a row by row basis. Again, matching the number of cars and the specifics of the car, each car line by line, with that is still available to rent, with the total number of cars that comprises the total of all Camrys, and then what's left over are the Camrys that have already rented. Now I sort them again, as I do each column, by year, number of trips, and day rate. And then I come down, and at the bottom of these columns, I have some totals. And so what I'm doing is I'm looking at the totals on a by year basis. So this is one row of vehicles. These are 2010s, so the year is 2010. Now you can see that there's a total of one car with 135 trips and a day rate of $32. That car is not available, so that means it's been booked. So it's 100% book rate. Well, bottom line is I'm analyzing what I'm really looking in particular at is a couple of things. I'm looking at the vehicles that have been booked, the cars that have been booked. And I'm going to come down because I'm really most interested in, because I'm thinking about buying one that's only a year or two old. So I'm really most interested in the 24, 23, 22, and 21 models, maybe even the 20 and the 19. Now, here's the basics. Okay, so let's look at the 2019. We have 13 cars. Those cars have a total of 491 trips. And they are, if you divide 491 by 13, the average number of trips for the 2019 Camrys is 38 trips per vehicle. Now, I know from personal experience that you can probably count on a trip averaging 5 days. Now, a lot of times trips will be much longer. Sometimes they'll be a little shorter. But you can probably easily, for a Camry, count that a trip is 5 days. Now, the average for all Camrys is $46 a day for 2019. And now what I want to do is I want to compare this data with this data, and here's what I'm looking at. Out of a total of 13 vehicles, 8 of them were rented. So what I do is I divide, if I do the math here, you'll see that I divide 8 by 13. So what this column here gives me is the book rate. What's the percentage of vehicles that are booked when we look out into, when we look at the near-term future versus the number of vehicles that are available. So 62% of these 2019s have been booked. Now, the average information here shows that 8 cars were booked, an average of 22 trips per car, and an average of $46 per day. This column, this yellow column, is the day rate difference. What does that mean? Okay, so what I'm comparing here is that this day rate of $46 for cars that are booked compared to the day rate for cars that are not booked of $41. The cars that are booked on average are $4 more per day. So I'm trying to also get a sense of how much pricing is factoring into the booking rates. And so I'm looking at the percentages here. Now, you're dealing with not really large statistics. Now, you've got a reasonably large number of data points, 116 cars total. But on an individual year basis, you don't have a whole lot of cars for most of them, except for this 23 row, year 23, you have a total of 37 Camrys in total. 41% of these 2023 Camrys are booked out. 15 out of 37 cars, 41%, have already been booked. At an average booking day rate of $48, compared to the cars that are not booked, average, and that's 22 cars that are not booked, $51 day rate. So the cars that have booked have about a $3 discount on average over the cars that have not booked. So if we look at 24, we only have 8 cars, but 63% of them, 5 cars, have booked out versus 3 that have not booked out. Again, the data sets are not real large, so you have to be careful. This is not what would be in statistics called significant sample size or statistically relevant sample size. This just gives you some general indications of what the demand level is. From a more global perspective, you can get a sense of what the demand level is, like I said at the beginning. But what shows here is that you have 63% of the 2024 vehicles are rented out at an average discount on day rate of $8 relative to the cars that are not rented out. So this is an interesting way to get crystal clarity about the availability of vehicles and the demand level of vehicles when you look out into the future. Now, some things that you have to be careful about, of course, is depending upon the type of vehicle, you may have very peak level demand. For example, we have a lot of Suburbans and Tahoes and minivans. Those vehicles are extremely in demand during the summertime. So summertime pricing is naturally going to be higher than pricing for those vehicles, say, in January when there's very low demand. Camrys, on the other hand, are not the kind of vehicle that people typically will take on a summer vacation. So the demand level in August for Camrys is not probably going to be significantly different than the demand level for Camrys in, say, January. So you have to be careful about comparing pricing. And you also have to be careful about factoring in what you expect your demand level to be. Now, I have done this also on RAV4s. Before I end the Camry, I'm just going to go up here again and say we have 53 cars that are rented and 64 cars that have not been rented. And so if we divide, if I just go ahead and do this math and I divide 53 by, well, actually, you know what? I don't think that's going to work. I'm going to do it this way. Plus 53 divided by 116. So 45% of the total Camrys have been rented when we look 2 days out compared to what there is available. So 45% rental. That means that if you buy a Camry, you're gonna be competing with a lot of people. Now let's look at a RAV4. This is the same kind of information for the RAV4, and I did it a little bit different here on the RAV4. I basically just used color coding to identify the vehicles that are not rented. So here are vehicles that are not rented. Here are vehicles that are not rented. So what I did is I looked at the vehicles that have been rented. Instead of doing a separate column, I just did it in 2 columns. So we have a total of 61 cars. 18 have been rented or have not been rented. So plus 61 minus 18, that's 43 cars. So if I divide 43 by 61, that's 70% of the RAV4s have been rented out. Now, from a pricing perspective, a RAV4 is a vehicle that in August is probably going to be renting at a premium over the vehicles what it'll rent for in late January. But now I'm going to scroll down and we're going to look at, again, all of the vehicles were rented out, 2014, 17, 18, 19. In this case, I'm looking in particular at the 20 through 24. And here again, I calculated the percent rented. Now, there's only 3 cars. 2 of them have been rented. That's 67%. There's 18 model 2023s. 13 of them have been rented. That's 72%. There's 19 2024s. 12 have been rented. That's 63%. These are pretty attractive numbers for the RAV4. Now, you'll see that this RAV4, the 18, was $20 less than the ones that are not rented. So the 5 that are not rented have an average daily price of $75. There's probably one in there that's got a ridiculously high price. Don't know why. Don't have a justification for it, but one of those is going to be a very high-priced vehicle. And it probably has 0 rentals. But sometimes people put cars on Turo and they put real high prices on them, and they represent statistical anomalies, but I haven't really accounted for that. But in any event, that's what's most likely going on here. But still, 13 vehicles, an average of 50 trips, an average of $55 per day, and that is $20 less than the average for the unrented cars. The 2024s, there are 12 vehicles, average of 36 trips per vehicle, $57 a day. And again, this is the we're comparing pricing to we're comparing pricing, but we have to be very careful. So these cars are priced a little bit higher than these cars are. But what I'm just generally looking at here is the demand level, and 63, 70%, 80%, basically advanced booking. 80% of the cars are rented. When we're looking a couple of days out, means that these have got a real high demand level. Now, once I figure out what the pricing range is going to be for the vehicles that I'm interested in, so you have the 2021s are $54, $41, $55, $57, and these are renting out pretty good. So $55, $57, a lot of rental demand activity on those. Good number of trips. So there is a tool that I've developed also, which is what you see here. And so what I'm doing here is I'm doing some calculations. I'm looking at what my day rate is. I'm factoring a $35 day rate. And then I'm saying, how many days per month will the vehicle be rented? And so I figure anywhere between 20 days, 25 days, and a maximum of 28 days per month. So if I multiply $35 times 20, that's $700. 35 times 25 is $875, and 35 times 28 is $980. So based upon a day rate of $35, a number of days here, this is my monthly sort of earnings before applying the percentage plan. Now I'm on the 90% plan, so I take this maximum revenue times 90% as an estimate of how much I would actually earn at $35 a day for a vehicle. So I would earn $630, $788, or $882. Now here you can forget the number of months. I mean, basically all I'm doing is plugging into this column an estimate of 2 things: an estimate of the monthly payment and an estimate of the insurance cost for that vehicle. I'm factoring in and figuring that I'm doing financing on every one of these vehicles, so I'm not just using Tint or Mint insurance or ABI, which is off-rent insurance coverage only. I'm going to be going ahead and getting full coverage through a carrier that covers and cares for and covers Turo vehicles, and it backs up the protection program. So I'm on a 90% protection program, and let me just hit enter. And these are my monthly payments, which include both principal, interest, and insurance. Now, what I do here is I divide, actually I subtract the 90% that I would earn. I subtract from that my monthly payment, and this is my monthly net cash flow. This is my monthly net cash flow. And then my weekly cash flow would be my monthly this is the net that I'm going to make above and beyond on a monthly basis. And then my cash flow on a weekly basis, actually, this kind of comes out a little, it's just these numbers happen to be the same. If I divide my monthly, actually I divide my 90% by, in N3, I divide my 90% monthly number by 4.33 weeks. This is what I'm going to end up on a weekly basis in terms of actual cash flow. This is going to be my net after paying expenses. So basically what I then do is I plug in, now these rows are all going to be the same. These rows are going to be the same. The only thing that's different is the dollar amount. So what I now have done is I've tied this cell to this cell. So you can see that this cell is this cell plus $2. And so what I can do now is I can just plug in. And so every one of these rows is this cell by at $2 additional. And so what I typically would do is I'll target above and below. Okay, so if we come back over to, say, the RAV4s, the RAV4s are going to run anywhere between about $41 up to about $57. So in terms of what their daily rent rate is going to be. So if I come back over here and I plug in $41 and I just hit enter, now what happens is 41, 43, 45, 47. And so if I were to continue this, I can actually now just copy these cells and move them on down. And you'll see that I'm now creating a whole series of $2 incremental daily revenue estimates so that I can, daily rental estimates, so that I can see what that means. Well, if I look at the RAV4s and I say, okay, they're renting really pretty good between $55 and $57. So in my worst case scenario, if I want to make sure my cars are rented out, I might want to come along and give it a haircut of a couple of bucks a day. So a couple of dollars a day would be $53. And so anywhere between about $51 and $53 is probably where I would end up renting these cars. So here's $51 and here's $53. Now if my note payment on these cars was going to be the $325, let's look here, $325. If my note payment was going to be $325 and I had $160 for insurance, my monthly payment would be about $485. So if I'm going to be probably renting these cars for between $49 and $51, the next question I'm going to have is, what am I going to likely be renting? How many days am I going to likely be renting them out? Okay, so if I only rent the vehicle 20 days a month, that would be a positive cash flow of $397. Now that's positive cash flow compared to my earnings at 90% for 20 days and paying my note. And this, of course, doesn't cover anything like, repairs or maintenance or anything like that. This is just total positive cash flow. But now I have to ask myself, at $49 a day, am I likely to only rent it out for $20, or am I going to be more likely to rent it out for $20 or even close to $30 a day? Well, my estimate of a RAV4, based upon my experience with these vehicles, is you're probably going to get a whole lot more like $25 a day. So most likely you're going to be looking at a positive cash flow on a weekly basis of an average of around $255, and a monthly net of around $618 after you pay your non-repair, non-maintenance expenditures. In other words, you pay your note and your insurance. But you might very well end up in the $51 range. So you're looking at $600, $650, $618, $600, $700. So I would say that between $49 and $53 a day as a rental, you're likely to have between $600 and $700 a month, between $255 and $275 per week, in terms of, between $600 and $700 of earnings net of your payments, and on a weekly cash flow basis of between $255 and $275 per week that these things are going to generate. So this is how I analyze vehicles to be able to decide which ones I want to purchase and add to my fleet. Now, this is a lot of work. I have not yet found a more efficient way to analyze this information, but it is, I think, helpful in determining what vehicles make the most sense to purchase and add to your fleet. So I thought I would share this process with you. It's a lot of spreadsheet stuff. You may have to rewind this video a few times and watch it again, but it's a pretty powerful tool for gaining insight in your market into specific vehicles that might be desirable vehicles for you to purchase and add to your fleet, and then how to predict what the revenue is likely to be as you do so.